And the next bit is another piece from Nick Savage-Mady, and we know the earlier piece was pretty cool. He and Stephen are going to talk about some of the favorite functions that clients have reported to enjoy. So Nick and Stephen, well, Nick, are you there first?
I am indeed, yes. Yes.
I knew you would be.
All right.
Okay,
so,
over to you.
All right, thank you very much for that, Grant. What I'm going to cover off in this section in terms of client favorites is a deep dive into the allocations engine within the system. Now, the reason I focus on this is because a lot of businesses have that split in terms of once you receive things like expenses, how do we actually split that off? And I want to kind of go through from the methodology of how allocations can actually be used, but also start to incorporate things like using statistical ledgers to actually drive that allocation split. And then also explain we can also use things like expenses and split those into projects. So how we can do that using something like Velexo to actually split and extend out that. And so from that point of view, it means that once you kind of automate those features, you can make it, again, more efficient of tracking the costs directly on each area within the business. So what I'm going to do is I'm just going to jump across into the system. So under finance and under the allocation side of things, we actually have the ability, like I said previously, to create allocations based on certain elements. So an allocation is essentially when we enter an AP bill into the system, whether it's telephone or whether it's utilities, or it could be marketing costs, rent, rate, whatever it's going to be, insurance, so on and so forth. How do we apportion those across multiple businesses, but also across multiple branches within those businesses? So this allocations area is really kind of the way in which you can hone the business and make those improvements. So the bill just comes in and it does it for you. So to start off with, I'm just going to have a little look at this reallocate telephone expenses. And in terms of an allocation itself, it's got some very simple things to start off with. So it's basically saying that, when do we kick things off? And if we leave that blank in terms of end period, it just keeps on tracking, keeps on going, or you can set end dates. So you can set them up specifically to say that it only runs between these kind of periods. Now, from an allocation method, you can also set up to say, I want to look at the account period to date, or look at the previous GL allocation and then determine the allocation amount based on the previous one. So instead of just looking for the account period to date, it'll look at the previous one and then work that out for the difference. And when it generates the GL journal, it'll use that feature. Now, from the distribution method, this is where we get a little bit more smarter in terms of what we can do. So the distribution methods within an allocation is by percent or by weighted ratio. But below it, we have things like by destination account period to date or by destination account year to date. So this is where we can start to incorporate our statistical ledgers or just using our kind of actual ledger to run the allocation and then determine how things are going to be split. Now, what I would say as well is that you can see in here, we've got our allocation ledger, so where things are going to get sent to, and what is our source ledger, so where are we going to actually use to source this information directly from. So again, you've got that kind of functionality based on the allocation settings to say, right, where am I going to post it to versus where am I going to get that information that I'm going to be calculating. But one other element I just wanted to point out right down the bottom here, which does get missed, is to do with sort order. Now, sort order is where we can do layered allocations. So you may want that you want all of these different allocations to happen first. And so obviously in terms of the order, the first one goes first, then second and third, then fourth. And so you can really dictate, I want all of these allocations running first, and then we have an overarching allocation to then split once we've done those allocations to start off with. So you can really start to stagger and layer the allocations in terms of what we're actually doing. Now, from a source account point of view, you can see under here, we can set up source accounts. So we can set up a branch, we can set up the account, and we can set up the sub account. So we can say that when an AP bill gets entered into the system, then if it's got all of these specified within the document, it then means that it will look at that and then do the split based on those. Now, you can also set up things like contra and sub accounts, so it flows through there, and that comes into line with your amount limits and percentage limits. So you can set up percentage limits to say 80% of this is going to be allocated and the rest will sit within this account, or we can apportion that off to a contra account for that side of things. Now, it isn't limited to one. You could add up multiple if you needed to. So we can have multiple lines set up on that one thing, and then we can do, if it's got this, it splits it based on the destination. So you can actually set up 2 or 3 different GL accounts in here and then save that as your normal. And then when that bill actually comes in, it then splits, it looks at those 3, and then it splits across the various accounts on the destination accounts. So from a destination perspective, it means that we can actually go in and we can say, right, what branches or what companies do we want to split this cost across? And what accounts are we actually going to split them to? And also, ultimately, from a sub-account level, this is where we can start to say, right, we want to actually split it based on a department. So if I just do F3, we can see in here, this is actually to do with programs and services. But if I go into the second level, just close out of that. In the second level, you can start to see this is where I can specify certain departments. So building up that sub-account structure will then allow you to, once the allocation kicks off and does the actual split, we can then really kind of get to a granular level based on our sub-account structure and how we have actually set those elements up. Now, the last bit, as you can see, is a weight or percent in this case. And so we can kind of go through and say, right, what do we want to set up? So 50% of it goes to the Victoria branch and also the Victoria region, whereas something like ACT gets 30 and Western Australia gets 20. So you can really start to kind of fine tune that from that point of view. Now, like I said before as well, from your statistical ledger, you can start to actually use statistical ledger to do your allocations as well. So for a normal allocation, we've just got this source account and destination account. And once we kick that off, we can kind of automate that procedure. Now, from something a little bit more complex, we can actually look at this one that says allocation by headcount. So the allocation by headcount, in this case, it actually looks at our statistical ledger and uses that to determine what's actually getting passed through. So the statistical ledger is set up within the ledger's area. And you can see in here, I've got a statistical ledger created. And it just means that I can use this to track information, and I can choose which companies are going to be involved and even which branches are going to be involved as well. So you can set up these statistical ledgers to kind of track that level of information. Now, the way in which it works is that it uses the journal transactions area. And it just means that if I go to my ledgers and I just go sort descending, you can start to see that I'm actually tracking different elements based on different industries to really kind of, hone in on what needs to be reported on, but also when we come to split things, we can then split it based on these totals. So our ending balances for these statistical ledgers will then determine how we split and do that allocation elements. So from this side of things, if I just look at my kilometers, or I could look at bed counts, you can see that when I create these, I've just essentially got a kind of pseudo account, and you can see it's linked to a branch and it says bed count for January, and we've got Victoria and we've got the different sub-account structure. And you can see in here that it's got like 500 and 600. So whereas for something like kilometers, we can just go into here and we can actually look at, for this, we've got a kilometers count for March, New Plymouth, and we've got the kilometers done by a certain person or a certain, like region, and we can enter these directly into the system. And then it starts to build up that month by month basis with our opening and ending amounts. Now, where that then comes into play is when we're doing the allocation methods, we can then do our allocation. We can look at our base account, and our base count in this instance is, we're doing it by headcount, and it means that we've got our source account, which is this. So in this case, it's our superannuation, and then for a destination, it splits it based on this branch, and using our base, which is our statistical ledger, to determine how it's going to be split. So really using that stat ledger to kind of split everything across. And then from that point of view, we set up allocations. Like I said before, we can actually do allocations as an automated feature. So once the bill has been entered into the system, we can then process it via this to create those journals, or we can just go in and add and actually just schedule that to do it on a weekly basis or a monthly basis or whatever we would do, and kind of set and forget. So you only really enter in one document, but then you're getting a real kind of complex split based on our stat ledgers or our layering in terms of our sort orders from that point of view. Now, one other element I want to mention, and it's one area that I've talked about with other clients, is really down to that project level, because as you can see within here, allocations doesn't necessarily cross across onto the project's area, but there are methods in which you can actually utilize Velexo to do that element as well. Now, if I jump in directly to my Velexo report, what I've actually done is I've worked out a way using some of the formulas within Velexo to pull down live data directly into a sheet. So in this case, we've got project expenses. And what I've done is I've brought through my projects in particular. And what the client asked about was, how do we split that cost based on the revenue percentage and based on a month by month basis? So what we've actually done is we've picked out the project. We've worked out the revenue based on our project turnover amount. And this transaction date up the top, as soon as I change that, it then adds in my post period. And you can see that from period to period, it then works out what is my revenue over here. And then simply using the power of Excel, I've just built a little pivot table. And that pivot table then goes, this is my determination, and gives me my weighting based on that ratio. And then what I've done is I've actually picked a GL code. So in this case, cost of goods sold for contractors, and I've allowed the system to pull through the account turnover. So it's pulling directly from the GL account. And again, I'm doing it based on the from and to period on what I've entered in there. So in this case, it's 22,800, and the calculation I then simply just do is where we work out, determine based on the weight, we can then go, right, what is that percentage split? And it gives us the expense amount based on the revenue. So very cool kind of split, and it gives you that information straight away. But how do we get it back into the system? So in terms of getting it back into the system, I've added in an extra tab, which is called the GL writeback. So the GL writeback is something that I've just created. And in this case, I've created a journal transaction ready to be pushed back into the system. And it means that I can go into here and I can say, right, this is a branch, this is account, this is a sub account, this is a project, and even this is a project task. So all of these things I've set up to just flow through automatically. And it then flows through from our project expense calc tab. And we can see that it's going to credit the original and then debit the new amounts within there. Now, utilizing Velexo, we can just go GL writeback, import current worksheet, and it says, do you want to create a new batch? Yes, I do. And from this point of view, it just fires directly into the system. So once it's done all the calculations, it can just create a general ledger transaction, and it's currently set on hold, as you would imagine, because you want to check these things. And then I can take it off hold and I can release it. So I can just release that directly into the system, and utilizing Velexo, we've just kind of worked out our costs based on that, and then just push that directly into there. So again, it's another allocation method from that point of view. Now, one other element that I mentioned in terms of projects to this same client was they were actually using a project to determine costs. So again, it's not limited to tracking, the turnover for a GL account. You can also say, right, I want to track all of the costs associated with this project, and again, associated with a time period, and then pull that through for project turnover. And again, just determine my split based on this calculation in this methodology. And then in a similar vein, push it back in via the GL write back feature from that side of things. So really that kind of gives you, some of the more finer ways of using the allocation methods to kind of, be smarter and more efficient on how the business actually splits those costs and how it tracks those kind of costs. Now, what I'm going to do now is I'm just going to stop there, and I'm going to ask Stephen to come back, if that's all right. And we're going to go into the Stump the Consultant session, which I wait with bated breath. So, Stephen, I don't know if you want to pop back in.
Goodness, that was exciting, Nick. I mean, you had me at allocations, but then when you start whipping out Excel and start doing write-backs into advanced, oh, goodness me. Well, the accountants would be getting excited in the room. It's fantastic. All right. So, Stump the Consultant. We've got a few questions here, Nick.
All right.
So, let's start with one that's a little bit close to the topic that we've just covered. Our business does not have the allocations process under the finance module that's being described, even when showing all menu items. Why not?
It may be potentially to do with the, I was going to say maybe potentially to do with the addition, but if it's not to do with the addition, then it's something that hasn't been turned on behind the scenes in the enable disable area.
Nice try, Anonymous, but you couldn't stump our Nick today. I think you're probably quite right. There is definitely some addition features there. I think it's the enterprise edition that adds multiple ledgers, including statistical ledgers and allocations. So if you're only using standard or using Plus edition, you won't have those two features available. Of course, I think Plus and Up introduce fixed assets as well. If it's not that, it might be feature enablement. So just reach out to your partner, to their support team, and I'm sure they can give you a hand with that. It is possible to upgrade your edition as well. So if those are some features that are going to bring some significant time savings or value, you can always move up to the enterprise edition. Now, another question here. Do project budgets roll up into company budgets?
Now, this is an interesting question, actually. So within MYOB Advanced itself, it doesn't allow you to roll up project budgets directly into GL budgets. But what we have done in the past with a client is that we've actually got it to pull down the project budgets into Velexo, and then update the GL budgets using the budget write back in Excel. So in the Velexo feature. So it doesn't normally directly link up, and that's because you don't know whether to determine what are internal budgets versus external budgets and so on and so forth. So we can do it within Velexo, but it doesn't do it natively.
Yeah, no, that's fantastic. Now we are running short of time, so I might just ask you a couple more, Nick, and we'll cover a few of the rest of these off in the Q&A session at the end of today's user group. But the question here, if a business doesn't want to buy a third-party reporting app such as Velexo, what are the options within Advanced?
I mean, that's a good question, because it depends on what you're reporting on, because to be honest, generic inquiries are incredibly powerful. If you're doing financial reporting, then the GL report designer is quite good. But what I would say as well is, don't forget, within generic inquiries, you've got OData feeds. So the OData feed allows you to actually publish a generic inquiry into OData, using OData into Excel. So you can still build reports within there, and you can actually do, you can see live data, but it just means that Valexo has those write back features and other features like that. So definitely don't underestimate generic inquiries and OData.
So you heard it here first. You can create generic inquiries with with OData enabled, have that data flow straight into Excel and use that as the basis of your financial reporting if you'd like. Is that right, Nick?
That is correct, yes.
Fantastic, fantastic. And it just comes down to this question of using alternative ledgers, particularly statistical ledgers. And there's a question here, can we track a statistic and then alter a service contract based on that statistic?
Yeah, we definitely can. It depends on the type of contract, because if it is, and it depends on how you're essentially handling it. Because what I would say is, from a statistical ledger point of view, you can track, kilometers and things like that, and also link it through directly on that. And what you can then do is you can use a business event to actually then feed it through to the contracts and update the the schedule of it. So you can kind of pass it through from that level. What might be the case also, though, is that you can do it based on, say, for example, the invoicing side of things. So if you're invoicing a certain amount of stock, so say, for example, grain or something like that, or coffee beans for like coffee machines and things like that, you can then work out your servicing and then work out, for this customer, this is the frequency they need to actually get the service in. So you can get that to drive using the business event back into the service contract, I would say.
Yep.
Yeah.
Okay. That's a great one. I hope that answers the question. We've got another question here. How can I track larger customer spends and budgets? Thanks, Eli, for that question.
All right. There's two ways I think you can do it. Well, two potential ways. Is the first one is you can use sub-accounts. So sub-account segments, you can potentially use a segment for customers if you wanted to for your larger customers. I've seen that done in the past, but if I'm being honest, probably there's a reporting tool which is like Focus, something like that. They handle budgets for customers and salespeople a little bit smoother. So it might be better looking at something like that, because it allows you to set the budgets up within there, and then everything flows through from Advanced into that Focus reporting tool as well. I think that's possibly agree on that, Stephen. I'm not sure.
Yeah, so Focus takes a little bit of a different approach in terms of reporting. It's more of a user self-service analytical tool. One of the benefits of Focus, particularly around sales analysis, is you can actually sort of start at a high level, for example, a territory or a product class, and drill down and through the data. And if you then associate your, for example, your sales order bookings in conjunction with sales order budgets, it gives you a good way to kind of analyze either client budgets or product category level budgets or sales rep budgets. It's just a bit of a different approach. That's great, Nick. Thank you. Another question here. Hi, Nick. Can we use the alerts in advance to notify when we are close to going over budget for a project?
I would definitely say so. Again, it comes down to the generic inquiries themselves. So generic inquiries are just really the building blocks of reporting, events, and also improving these kind of efficiencies. And what I would say is, from a project point of view, if you're tracking already your kind of costs within the project, you could just have a simple generic inquiry that then works out what percentage are we getting close. So at 40%, send off a notification to the project manager to actually be aware of. So I would definitely say you could do that side of things.
Fantastic. Now, we do have a few more questions there. And rest assured to the audience, we will come back to those in the Q&A session. And I think at this point, we will hand back to Grant.